Namaste investors. 5 months back, we conducted our 27th Mission Smile webinar on Wonderla holidays. So in this video, we will put a snippet of our webinar wherein we discuss about the industry overview, as in why amusement parks as a whole have a good and a very huge runway for growth in future, in India especially. And we will give you a brief about Wonderla, its business model, and 3 other mental models that crystallizes our investment thesis. Now, although in the last 5 months, the stock has done reasonably well, but the idea is to frame the learnings and the lessons that we understood by
So as you can see here, this is the size of the global amusement park industry. And this is where a tiny Indian amusement park, over here you can see, this small little dot is the Indian amusement park industry. And that is how you can understand how small it is at the current juncture. So where the global amusement park is about $49 billion, and in case of India, it is only $500 million. I'm sure many of you must be saying that there are reasons for that. And we are not saying that immediately we are going to reach somewhere around 49 billion. Of course, there's a long journey to cover there. But it is always good to look into businesses which form part of a very large industry, but they are very small and doing good. Right? That is where Wonderla is. And as we mentioned, there will be 4 rides. The first ride is about the macros. Second ride is about Wonderla. Third will cover the financials. And fourth will cover 3 important business models or mental models, which will help you understand the positive, the kind of business model they are having. And post the presentation, we'll have an extended session with all of you, so that if anyone has any questions, we can discuss. Right? So, why these are very clear reasons why Indian amusement parks have a long runway, and I'm not going to go deep into that because all of us already understand, right? Now, what is Wonderla? Wonderla basically has 3 operational parks in Kochi, Bangalore, and Hyderabad. They started with Kochi, and then in 2005 they also made one in Bangalore, and then in 2016 they started in Hyderabad. And one hotel or resort, whatever you call it, is there in Bangalore, which is closer to the park they have. And there are 2 parks which are soon going to be operational, one in Odisha and the other one is in Chennai. In fact, if you have been following Wonderla for a long time, you would have noticed that in 2018, they bought a land parcel for about 100 crores in Chennai. But then they had some issues with the government where government levied an additional tax. And that is why they couldn't start building their park on that. But in the month of May only, there has been a resolution where Wonderla is going to get 10 years of tax holiday there. And that is how they have now begun the operation in terms of building up the park over there. Right? Now, before coming into the numbers, I just wanted to say that I think I missed something. I'll just go back. Yeah, I missed this slide. Now, before going into Wonderla, you can see this stat. I just listed down the top 10 amusement parks in the world based on their footfalls. And you can see most of them are in United States. And the average footfall in all these parks have been between 10 to 20 millions. Okay. All of these parks are in USA, and the park in India, as in the top 3 park in terms of footfalls, are with Wonderla only. And if you just check the footfall, which we'll again cover in detail in the subsequent slide, on an average, they have 1 million footfalls only, right? Now look at the population of US and look at the population of India. Of course, there have been issues like the spending power or the discretionary consumption power in US and India are not same. But do you think it is going to be the same in case of India for the next 10 years or 20 years? So that is the kind of runway we have. The second question which might come in people's mind, and I was discussing it with some of my friends, people say that if Wonderla's park, if we go from 1 crore to 1 million to 2 million, it will be very difficult for people to find it convenient or entertaining because there will be lack of space. So if you go by what management says, they have space for on an average 6,000 people per day. And if you do the math, it comes to about 2.2 millions, right? So even if Wonderla's park footfall go from 1 million to 2 million, they still have the space to accommodate them. Of course, there would be some problem in terms of too much of people having coming in one place. So if you look at their park, I'll cover that also in subsequent slide. All their park have huge land unutilized around the park, which they can slowly utilize when they see this kind of footfalls happening, right? So that is the kind of scope this business has. And they've already paid for the land. They already have the facility. They don't have to do any capex. They just have to do, they don't have to do any large capex. They just have to make more rides and make it more available for their people or public who attend those parks, right? This I've already covered. So we are going to cover 3 mental models because I believe when we look at businesses from mental models perspective, our understanding of business becomes more and more clear in our mind. And we look at it in a far more broader perspective than just looking at the numbers or just looking at the growth or just looking at what is the park doing or what kind of parks, right? So to move beyond the numbers and to further deep dive into what kind of business a Wonderla holiday is, let's look at these 3 mental models. Number 1 mental model is lightning in the bottle. Again, this is not our mental model. A very good blog post was written by Mr. Ian Castle, who is a famous investor in the micro cap space. Many investors all around the world know about him, and you can just check this blog by the name Lightning in the Bottle. And this mental model basically talks about, in this blog, Ian Castle talks about 3 things which actually leads to a business which could actually behave like a lightning in a bottle, which is waiting to come out. One is a small market cap company, which is not very large, like say 50,000 crore or 1 lakh crore. Company which has a lot of high organic growth built into it and operating leverage. And the third is some sort of scarcity, right? So in case of Wonderla, we found that all these 3 are perfectly fitting. It has a small market cap of 3,000 crore right now. Look at the organic growth which is possible there. Growth in footfalls we have already seen in their mature parks, how the footfall has gone to 1 million already. Increase in the ticket price we have seen. Unutilized lands in all parks. That is again a source of operating leverage and organic growth because they are not using those land yet. Once they see more footfall, they can easily expand. They don't have to do any large capex to accommodate this new or this large footfall, which will happen sometime maybe in 3 to 5 years from now, right? Scope of adding newer parks. Again, they just have 3 parks now, and India is having a dearth of these kind of amusement parks, right? There is one in the name of Nikko Park in Kolkata, But if you compare them with what Wonderla is doing, it's completely different. Then there is one Imagica, which after the change in the management, some sort of recovery is happening in that business. But if you compare the business model of Imagica and Wonderla, you will see the difference that Wonderla is far more asset light compared to Imagica, and the upfront capex in Wonderla is far lesser compared to what is there in Imagica. In fact, interestingly, during the COVID period, Wonderla had the option to even buy out Imagica, but they refused to do that. And I personally believe that was a right decision to do, because the way Imagica parks are run and the way Wonderla parks are run are completely different. And it is a good sign of a management which is sticking to what it is known for, and what is its moat basically. The moat of Wonderla is using more and more their own rights and importing lesser and lesser rights, which leads to less cost of capex when you start the project, right? So these are the 4-5 organic growth and operating leverage lever in case of Wonderla. And scarcity. There are very few listed players. There's one Nico Park, which is a tiny little company, nobody knows about it. Then Imagica, we know what kind of problem they have faced in the past in terms of high leverage, and they have recently had the management change. And the second source of scarcity is low float in the market. Promoter holds 70% of the shares, right? So I think lighting in the bottle is a very good mental model for us to understand Wonderla in that sense. A small market cap, high organic growth and operating leverage built into the business model, and then there is some sort of a scarcity, right? Mental model 2 is about change. So we all know about that favorite quote of Jeff Bezos, where he talks about why it is important to bet on things which are not going to change. But if you look at the market, stock market has a habit of rewarding businesses or companies which are undergoing a change. So 2-3 changes which we all know about is a management change, which is a very hot topic, and most of our community members, we are always talking about this company had a management change, so we should look at it, and it could get some this thing. It could be re-rated, right? So management change is one, new product is one, new geographies is one. So market re-rates a stock pretty quickly based on these above 3 changes. However, I personally feel a 4th change, which is far more important than these 3 changes, is the change in business model. And this kind of change is far more enduring and long term. It happens over a long period of time. So an investor can benefit from this change for a long time. A management change or a new product or a new geography cannot benefit an investor for a long time. उसके लिए जो re-rating होना होता है बहुत short term में 6 months, 1 year or max 2 to 3 years में वो हो जाता है re-rating. But when there is a change in business model, right now they are only talking about Odisha, which is going through the asset light model. They are already in terms of they are already in talking terms in the case of Goa, Gujarat, Punjab and others. And look at the situation in India. Most of the states now realize they need to grow the tourism in their business, in their state. And to grow the tourism, a very good thing to do is to have good quality amusement park. And there is no, in terms of quality, there is no one in even in any distance with Wonderla. That is where Wonderla has this advantage. So the change in the business model of Wonderla is asset light, low capex strategy for all these new parks. Now, add to this the luck factor where the Chennai problem, which was happening, which was there for last 4-5 years, recently got solved. And that is where you see now how the stock has re-rated in the last 1 year or so, right? So that was about mental model 2, that is change. And this is the mental model 3, which is of game selection, right? So this mental model has been, I'm forgetting the name of the famous investor who basically who came up with this mental model, where he says that there are 3 stages. Okay, over here it is here. So Mr. Yen Liu, he's a very famous investor, and you can check about him also on the internet if you don't know. I'm sure many of the members are already aware of this person. He talks about businesses in a very unique concept, where he says that in game selection, we focus on the replication phase of a business cycle. So there are 3 stages. One is the proof of concept stage. What is a proof of concept stage? Proof of concept stage is a stage where the company is actually finding its feet. They are trying to cement on the business model what they want to do. They will make a product or service or do something, and then slowly it will mature and they'll see the fruits of it. That is the proof of concept. Once the company is sure about what they are doing and it is working well, then they enter the replication stage. So, and not many businesses have that liberty to have a long, prolonged period of replication. Most of the businesses are businesses where the proof of concept stage and maturation stage is not too far away. But then there are few businesses like Wonderla, where after the first phase, which is the proof of concept, you have a long enough phase where replication can happen, right? So in case of Wonderla, that is where we believe right now from proof of concept stage, they are entering the stage of replication. So, and given the following metrics of number of footfalls, ARPU, share of non-ticket revenue, total number of sizable amusement parks in India, it is very clear to all of us. There is no debate on that the maturation stage is still far away.
And if you want to watch the full webinar, then you can become a Mission Smile member. Thank you.